Welcome back to our 10-part series on calculating the economic and environmental cost of Bitcoin. I'm your host, Hass. Now that we've established Bitcoin in the context of energy in the first episode of this series, let's have a quick run through the numbers at a high level now to put cost and price into perspective, and so you don't have to wait around for 3 months if you're just looking for an executive summary. Also, again, if you want to skip ahead, I provided a link to my full report in the description below. To kick off, all data used in this paper is at block 534,240, the 265th difficulty change, mined on the 29th of July 2018. Network difficulty was around 5.95 trillion, hash rate was roughly 42.6 exahashes per second, and price on the Bitfinex exchange was about $8,200. Here's what's changed since January 2015. Cost per gigahash is down 94% to 3.7 cents. Energy used per gigahash is down 89% to 0.098 watts per gigahash. Hash rate is up 14,317% to 42.6 exahashes per second, and prices returned 4,000% on investment over that time period. This video series serves to update the assumptions used in prior versions of this research. See the link in the description below, and provides a systematic methodology of modeling the environmental and economic costs of Bitcoin. Furthermore, the series will provide a thorough discussion on the economics of Bitcoin mining to support the underlying model assumptions. Comparative data with the gold mining industry will also be revisited. So, based on the assumptions set forth in this paper, the model has estimated the average cost to mine 1 Bitcoin to be roughly $6,450. It should be noted that this research is an inductive, bottom-up estimate with the intent to provide a ballpark estimate only. A sensitivity analysis has also been undertaken to demonstrate the range of costs under different scenarios, which shows a realistic range of average mining costs of between $5,400 per coin and $7,500 per coin. Due to the nature of competition in the Bitcoin mining market, costs that are significantly higher than the market price of Bitcoin can generally be ignored in the short term. The previous version of this research omitted the cost and impact of air conditioning to the network, so the tonnage of carbon dioxide was underestimated by almost a third. It also didn't capture the impact of manufacturing, packaging, and air freight transportation of ASIC mining rigs, or the impact involved in the resource extraction or recycling process. The new methodology set forth in this video series captures these items, and the result is a Bitcoin network that exhales 63 million tons of carbon dioxide per year, about 0.12% of global greenhouse gas emissions. Of the 160,000 terawatt hours of energy generated globally each year, the Bitcoin network chews through about 105 terawatt hours per year, or about 0.066% of global energy generation. It should be noted that all figures include the impact of the manufacture of ASICs, which represents over 50% of all emissions generated. Mining transaction fees were also not considered in the previous study, as in early 2015, the fee market was almost non-existent. In 2015, the daily average miner's fee revenue was only about 22 Bitcoins. For the 6 years between 2009 and 2015, the average was only about 15 Bitcoins. In the past 6 months though, daily revenue has been very consistent, hovering at just under 50 Bitcoins per day. To that end, this extra revenue has been accounted for in this update. In the next episode of this series, we'll be having a look at Bitcoin macroeconomics to set a broad context of how market dynamics work in the Bitcoin mining space. We look forward to seeing you all then. I'd also like to thank Lena Klassen for her review of my methodology and calculations. I rely on my readers and viewers for feedback so that I can continue to refine my model and assumptions based on new ideas and information, so please feel free to leave any constructive feedback in the comments below. As always, thanks for watching, click like and subscribe to our channel, and catch us on Twitter and LinkedIn for more. Until next time.